financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Well, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. My name is Jerry Robinson, as you just heard, and we have a really big show for you today. We're going to be talking about, as you can see from the title of today's podcast, China's new digital currency, the digital Yuan. So this is a digital version of the Chinese currency that has been released. We've been monitoring this story now for some time. We told you that China has actually been investigating blockchain technology and specifically the creation of a digital version of its currency since 2014. Well, there was a pretty big article that was put out by the Wall Street Journal this week, and it was written by James T. Aretti, and it was entitled, "China Creates Its Own Digital Currency, a First for Major Economy." And what I thought I would do is I would read you some of this article, and I'll make some comments, but I think this is something to really keep in mind. Those of you who are investing here in the United States, or anywhere for that matter, and are concerned about the state of the US dollar, well, this is certainly a challenge to the supremacy of the United States dollar system that we see today, propped up, of course, through the petrodollar system. And so there's been a lot of angst around the United States dollar and its place within the world economy. And for years, many different countries have been seeking ways to be able to alleviate the pressure that they feel due to the reigning supremacy of the United States dollar. And so this article is, I want to read just a little bit of it to you, and we'll make some comments on China's new digital yuan and what it might mean. We've also got some new data, by the way, out of the IMF, showing that the dollar's share of global reserves has decreased to its lowest level since 1995. The U.S. dollar now stands at around 59% of global reserves as of December of 2020, and that's about a 1.5% percentage point decline over the last 3 months or so, over the 3-month period beforehand. And the U.S. dollar, of course, is down about 8% over the last 12 months, largely due to the incredible amount of spending that has been going on and leading to trade deficits. And China has been really enjoying the economic reopening, being one of the very first economies to really reopen to the world in the wake of the COVID-19 crisis, the public health crisis we've had. And so too, the European Union has been seeking for some time now to create a common bond market for the European Union area, for the Eurozone. And all of that is weighing upon the U.S. dollar. We've seen a little bit of a respite in recent months since we've begun to see surging yields here in the United States. Well, when you have surging bond yields, that is supportive of the domestic currency. But overall, the United States dollar, we see having more complications ahead due to extreme monetary policy, extreme fiscal policy that is almost reminiscent of what we saw back in the late 1960s in the Johnson administration, whenever there was the Great Society spending, there was the Vietnam War going on, and then literally by the time President Nixon came into office, by around August of 71, he just detaches the dollar from the gold standard because the spending has become so extravagant and so incredibly rooted in deficit spending that nations wanted their gold back. France was demanding their gold back. Other nations wanted their gold back. And so, we have lived through times like this before, but never to this extreme. So no one alive today has ever seen this kind of extreme monetary policy, this kind of extreme fiscal recklessness that is literally dependent upon debt to create growth to the levels that we see today. Many years ago, back even like in the 1950s or so, the United States could generate $1 of debt and it would lead to $1, a commensurate amount of GDP growth. But today, in today's world, it takes $4 to $5 of U.S. debt to be generated in order just to create $1 of GDP growth. So it's not a very good picture as we look forward. It's a concerning picture economically speaking, but particularly for the United States, because they're the ones who have the most to lose. They're the reigning champion right now in the global economy. And so if someone is going to lose, if the system is going to change or shift, it's very likely not going to shift in their favor. They're the ones who have the most to lose. As I had stated, the currency today, the currency now stands at about 59% of global reserves as of December of 2020. That's the latest from the IMF. And when you think about it, that's an important number to look at because central banks, they're the largest players in this space. They have about $12 trillion in foreign reserves. And so when they make a move, that is an important development. Now, what I want to do is as I mentioned, I want to talk about this article. China creates its own digital currency, a first for major economy, by the Wall Street Journal. This article put out on April 5th, the date line here, which would have been Monday. But let's read a little bit of it here. I'll just read some of this to you and then we'll comment. It begins, 1,000 years ago, when money meant coins, China invented paper currency. Now the Chinese government is minting cash digitally in a reimagination of money that could shake a pillar of American power. It might seem money is already virtual, as credit cards and payment apps such as Apple Pay in the US and WeChat in China eliminate the need for bills or coins. But those are just ways to move money electronically. China is turning legal tender itself into computer code. Cryptocurrencies such as Bitcoin have foreshadowed a potential digital future for money, though they exist outside the traditional global financial system and aren't legal tender like cash used by governments. China's version of a digital currency is controlled by its central bank, which will issue the new electronic money. It is expected to give China's government vast new tools to monitor both its economy and its people. By design, the digital yuan will negate one of Bitcoin's major draws, anonymity for the user. Beijing is also positioning the digital yuan for international use and designing it to be untethered to the global financial system where the US dollar has been king since World War II. China is embracing digitization in many forms, including money, in a bid to gain more centralized control while getting a head start on technologies of the future that it regards as up for grabs. Digitized money could reorder the fundamentals of finance the way Amazon.com disrupted retailing and Uber technologies rattled taxi systems. That an authoritarian state and U.S. rival has taken the lead to introduce a national digital currency is propelling what once was a wonky topic for cryptocurrency theorists into a point of anxiety in Washington. The dollar has faced challengers before, the euro to name one, only to grow more important when rival shortcomings became apparent. The dollar far outstrips all other currencies for use in international foreign exchange trades, at 88% in the latest rankings from the Bank for International Settlements. The yuan was used in just 4%. But in its new incarnation, the yuan could gain traction on the margins of the international financial system. Josh Lipsky, a former International Monetary Fund staffer now at the Atlantic Council think tank, said, quote, "Anything that threatens the dollar is a national security issue. This threatens the dollar over the long term." The digital yuan resides in cyberspace, available on the owner's mobile phone or on a card for the less tech-savvy, and spending it doesn't strictly require an online connection. In tests in recent months, more than 100,000 people in China have downloaded a mobile phone app from the central bank, enabling them to spend small government handouts of digital cash with merchants, including Chinese outlets of Starbucks and McDonald's. China has indicated the digital yuan will circulate alongside bills and coins for some time. Bankers and other analysts say Beijing aims to digitize all of its money eventually. Beijing has not addressed that. Digitized money looks like a potential macroeconomic dream tool for the issuing government, usable to track people's spending in real time, speed relief to disaster victims, or flag criminal activity. The money itself is programmable, Beijing has tested expiration dates to encourage users to spend it quickly for times when the economy needs a jumpstart. Okay, so let me just stop here for a minute because we've already said many things in this article here. China creates its own digital currency, a first for major economy, from Wall Street Journal by James T. Aretti. And I want to point out this, especially the power that the central bank, the issuing authority, will have over this digital version of the yuan, realizing that it'll be much more simple. In fact, the article calls it a potential macroeconomic dream tool for the issuing government. And the fact that you'll be able to track people's spending in real time. You'll know exactly how much of the digital yuan is in circulation at any given time. Think about the fact that the United States can put out and print paper currency, or any nation for that matter can print paper currency, but it really doesn't know where it is unless it has some sort of tracking device in every single bill. It doesn't know where those are, who holds them. It doesn't know if some of them have been lost, and so it just generally just replaces paper currency in the system at a predetermined rate based upon all of these unknowns. But when you have a digital currency that can be tracked in real time, then you're able to have much more data. So the central bank in China is going to be filled to the brim with data here that they don't already have. It'll also be helpful in flagging criminal activity, as it states. But also, I want you to notice the fact that we're talking about programmable money, right? This is always what Bitcoin has been. Programmable money. This is something that many people never even knew could exist. But now Beijing is testing expiration dates with the currency, with this new digital currency. And so this would be a dream, for example, the Federal Reserve, because when they want people to spend money, what they'll do is they'll often lower interest rates, or even in the case we've been seeing recently, they've been just sending us checks in the mail, right? They've been sending us checks in the mail from Washington, the Treasury Department sending us checks, telling people, hey, go spend this money, go use it for, it's stimulus. Well, what if there was the ability to put a expiration date on the use of that money? Well, then you could actually get a lot more certainty on the economy. I mean, the policymakers would then know that we're putting out this much in programmable digital yuan, and it has to be spent within this time frame. And everyone understands the incentive. They would go and spend it or use it however they needed to. So we're talking about something very draconian here, something very different than the decentralized ideas that we see with Bitcoin and with Ethereum and some of these other projects that are designed, ultimately to be decentralized. Well, you can invert digital currency and make it centralized. That's what China is doing. And that's what the United States is also looking into doing. But here's the problem. China has beat the United States to the punch on this. And this is not the only thing they've done this with. They're way ahead of the United States on drone technology. They're way ahead of the United States on artificial intelligence, way ahead of the United States on robotics. I mean, just fill in the blank when it comes to leading technologies, renewable technologies. China is ahead. And it's not surprising to see that China is also ahead in this space of blockchain technology as it creates a centralized currency that it's going to give it, a much more power and control over its economy. Now, let me continue on with this article. I'll read you a little bit more here. It says, what about volatility? Cryptocurrencies such as Bitcoin are famous for that, but the People's Bank of China will strictly control the digital yuan to ensure there aren't valuation differences between it and the paper bills and coins. So that's important. In essence, this means that you won't really want to speculate with the Chinese yuan because the digital version of it, because it's not going to be wildly, fluctuating in price like an average cryptocurrency today, because they will keep it in a strict, tight trading band, keeping it the valuation right there with the average paper currency and coin currency. When Bitcoin launched in 2009, the article says, most nations' policymakers largely played down its significance. China, however, paid attention. Always hyper-vigilant to threats, the leadership feared that a cryptocurrency could undermine government power if people began to use it in earnest. So clearly China was concerned, and we even saw this concern, and we saw China really accelerate its digital currency plans whenever Facebook's Libra was being debated, even on Capitol Hill. You may recall Facebook pushing forward a currency, a digital currency known as Libra, that its 1 billion plus users would have access to and they could use it for settling transactions or different things like this, and it would be tied to a basket of currencies. Well, this caused quite a bit of alarm, not just in Washington, but in China, where they were a little bit concerned that there might be some sleight of hand going on here. Well, we still believe that many corporations like Apple and Amazon and Facebook and others will eventually develop their own currencies. These will be corporate currencies, not cryptocurrencies per se, but they'll be digital currencies that are corporate currencies controlled by these corporations, and you can use them when interfacing with their applications or interfacing with their products and services. Well, China is concerned about that. It's trying to raise the profile of its currency globally. Right now, when you take a look at, the world's use of the Chinese yuan, it's not very high. But when you look at the actual foreign exchange reserves, it's really only about 2%. So we had mentioned that the United States has about 59% in total reserves. Well, China's is much, much lower. It's, below 5% when it comes to foreign exchange reserves being held by central banks. So, as we think about this, we can see that China is trying to get ahead with its currency, and moving into blockchain technology seems to be a smart way of going about it, at least according to them. Let me continue here with this article a little bit more. There is a sort of Uber fear, said a senior European central banker who has spoken to Western counterparts, referring to stress on taxi systems when the ride-hailing company arrived in cities around the world. Quote, "You don't want another country's currency circulating among your citizens," unquote, the banker said. And so when we think about this, what we realize is that a country's currency, if people in your country start using some other country's currency, well, that can be devastating to your own economy. And that was the fear here in China, that if they didn't get ahead of this, that they might be in trouble. Well, now they are moving way ahead of the game, way ahead of the curve. The Federal Reserve is still kind of kicking around the idea, still, thinking about a digital currency. The reason why the Federal Reserve is lagging here, why the Treasury and the Federal Reserve are lagging, is because they do not want to have this conversation. They don't want the digital currency conversation. Many people say, well, no, they do because they want total control. Well, yes and no. Yes, they'll have more macroeconomic policy control if they have a digital currency, but at the same time, digital currencies kind of a double-edged sword. It's going to hold them much more accountable as well. The opaque system that we have today, the centralized system that we have today, the decentralized aspects of a blockchain really don't suit the opaque nature and kind of the predatory nature that exists in our present system. So it's not really a conversation that I think policymakers really want to have, but they don't have a choice. And China is now moving ahead rapidly, which is really dwindling the amount of choices that people have about sitting on the sidelines. The article continues, the U.S., as the issuer of dollars that the world's more than 21,000 banks need to do business, has long demanded insight into cross-border currency movements. This gives Washington the ability to freeze individuals and institutions out of the global financial system by barring banks from doing transactions with them. This is a practice criticized as dollar weaponization. And of course, we've been seeing a backlash to this, in recent years through what we would call de-dollarization, right? We've been seeing quite a bit of many countries stepping up their de-dollarization efforts as the Fed has cut interest rates to zero, implemented unlimited quantitative easing, and on and on. Again, we talk about, the outrageous amounts of fiscal and monetary stimulus, reckless really in its approach. And countries are looking for a solution. So let's see. The digital yuan, the article goes on, could give those the U.S. seeks to penalize a way to exchange money without U.S. knowledge. Exchanges wouldn't need to use SWIFT, the messaging network that is used in money transfers between commercial banks and that can be monitored by the U.S. government. The chance to weaken the power of American sanctions is central to Beijing's marketing of the digital yuan and to its efforts to internationalize the yuan more generally. Nicholas Burns, a longtime American diplomat and favorite to be an ambassador in China, recently said, quote, "The Chinese have created a problem for us by taking away our sanctions leverage." And toward the end of the article here, China's digital strides draw attention to how the U.S. needs to modernize its own financial infrastructure, according to Kevin Warsh, a former Fed governor, now a Stanford University's Hoover Institution. He said, quote, "If we wait 5 or 10 years, we may well end up with some very bad policy choices. More than 60 countries are at some stage of studying or developing a digital currency, according to research group CBDC Tracker. Digital currencies hold some of their biggest potential for the 1.7 billion people globally who the World Bank says lack a bank account. The Bahamas has already issued a digital currency to address financially underserved populations. Some central banks say such currencies would come in handy for families of migrant laborers who make tiny fund transfers that are cumbersome and expensive. A senior European central banker noted that international person-to-person money transfers can take days and worried that speed and efficiency could eventually make the digital yuan a preferred currency for remittances as countries deepen financial ties with China. Well, that's a really important point, is that there are so many people, billions of people today who are unbanked and who are unserved. And China has access to many of these countries and has good relations with many of these countries. And in fact, they've been fostering good relations all across Africa, across many parts of the Middle East and South Asia. And so China is in a position now with its digital yuan to provide a powerful substitute for that remittance system, where people will take money and they will send it to some other country. And it's very expensive. Sending money around the world outside of blockchain is expensive. And this is why blockchain has been so powerful, is that it solves real world problems, right? Many people don't understand why digital currencies and blockchain are thriving as they are. And the only reason I think that many people don't understand why is that they don't understand the problems that are being solved by these technologies. The blockchain technology solves a real big problem when it comes to money transfer and value transfer. In fact, it's really solved the problem. There are still some outstanding problems to be solved, but overall, things have really changed since the advent of these digital currencies. And so China sees this, and it is jumping aboard the train and trying to take advantage of it as it raises its profile of its currency globally. Here's how the article ends. It says, asked during a recent Senate appearance whether the dollar could be digitized to help the U.S. defend its supremacy, the Fed's Mr. Powell said researching that question is, quote, a very high priority project. We don't need to be the first, he said. We need to get it right, unquote. So this article made some waves, and I saw it, making its rounds on social media. I also saw many people commenting on this. There hasn't been, I think, enough discussion in the United States about this topic, and that's why we're doing this podcast, is just to really focus on this topic, that we are going to see digital currencies being released by nations. These are going to be, country-based digital currencies. And why this is so powerful for those of you in the audience now who own digital currencies. Maybe you own, Bitcoin, or maybe you own Ethereum, or maybe you own Cardano's ADA, or maybe you own some of these other cryptocurrency projects and some of their native tokens. Well, right now we live in this time where many people don't own digital currencies and they don't understand them. And so if you own digital currencies today, you're very early, relatively speaking. You're an early adopter because the world really doesn't know what to do with these things quite yet. But when China fully unveils its digital yuan, it's still in the testing mode. They're still kind of rolling it out as we speak. But as that nation adopts it, it's a major economy, then what's going to happen is that people are going to begin to use this digital currency and they'll find out that it's easy to use, right? That's the problem that many people see with this system, is that people will see how easy that it is. It's very easy, for example, to use PayPal to pay for something, right? We all have used PayPal or Cash App. We have all used, something like that. If you're in China, 4 out of 5 payments in China are either using Tencent or Alipay, right? 4 out of 5. So those are very easy payment methods. And using cash or writing checks, is a little kind of going out of vogue. It's been that way for some time. But now with digital currencies, which are just really digital adaptations of the paper currency that you hold in your pocket, when governments begin to teach people that digital currencies are safe to use and that they hold the value and that they're not wild and speculative, then many people are going to begin using digital currencies, right? It'll just slowly begin to happen. At the national level as they begin to release national digital currencies around the world. China is going to be the first major economy to do so. The United States needs to catch up. It needs to realize what's happening here, right? And the United States has been, as I said, kicking this around because they don't want to have this conversation, to be honest with you. They don't want to get into a competition with other nations with this. They really enjoy the system the way that it is. You see, right now, everything favors the United States. And so if you begin tinkering with something that's not broke, as they say, don't fix it unless it's broke. Well, it is broke, right? It is definitely broke. And that's why we see an enthusiasm for other solutions. But to the United States, it's not broke. They'd rather just keep it just the way that it is, thank you. They're not interested in rocking that boat whatsoever because it totally favors Washington. And so as more people begin to realize what digital currencies are, and as nations begin to release them and begin to encourage their use and educate the population on them, then the incredible benefits of decentralized cryptocurrencies like Bitcoin, for example, are going to become clear and obvious. Think about the difference. Think about the difference. Whenever the United States finally gets around to issuing its own version of a digital dollar, well, what would you rather have? Would you rather have the digital dollar that goes down 8% in 1 year, just as we've had with the US dollar over the last 12 months, dollars down about 8%? Would you rather have that? Or would you rather have a cryptocurrency that can go up in value instead of always only going down, right? Which is what the dollar does. Well, I think the answer is pretty clear. What would you rather have? Would you rather have a currency that has an expiration date placed upon it, like the Chinese are proposing? Or would you rather have a currency that's digital that doesn't have an expiration date on it, like Bitcoin, for example, right? Would you rather have a currency that's digital, issued by your nation, that is infinite supply? Literally, there's just no total cap. They can just, make as many as they want to. Or would you rather have a currency that is finite in nature, like Bitcoin, where only 21 million can be created? You begin to see the issues here that are emerging, and the United States is definitely playing catch up in this area, as they are in many areas. They've been a day late and a dollar short now for many years, and things are accelerating. The Chinese are moving ahead rapidly with many different technologies, and this has been accelerated by our public health crisis, where many corporations have just pushed heavily into technologies that perhaps they had been avoiding for some reason or for the sake of cost or time, but now it's become prudent to push into new technologies and to leverage them in this time of very unique, our unique health crisis that we face here in the 21st century. And so as we look forward, what we see is that China is leading the race when it comes to digital currencies. And this is not a surprise whatsoever to us here at Follow the Money. We've been talking about China's dominance for many years and how it continues to dominate in many ways. Now, we don't expect that the digital yuan is just going to suddenly overtake the United States dollar as the world's reserve currency. We also don't expect Bitcoin to overtake the United States dollar as the world's reserve currency anytime soon. But we do believe that the steady erosion of the supremacy of the US dollar is in effect and will continue to remain in effect unless the United States can come up with a plan to stem the bleeding of its own currency. Maybe I'll conclude here with a report from Goldman Sachs. Goldman Sachs has predicted that the digital yuan that China is creating could reach 1 billion users over the course of the next decade. And that could, according to Goldman Sachs, threaten the established role of the United States dollar as the world's reserve currency. Of course it could, right? 1 billion users of a digital yuan would definitely stifle the effectiveness of Washington's dollar policies, its sanctions. I mean, again, remember, using this digital yuan would allow countries to be able to sidestep sanctions placed or imposed upon them by Washington. So this is a brave new world we're moving into. It's a world of digital currencies. It's a world of centralized currencies using a technology that was intended to be decentralized. And the winners and losers from this are still yet to be seen. Hey friends, Jerry Robinson here from Follow the Money Radio. Are you a new cryptocurrency investor or considering becoming a cryptocurrency investor? One of the very best cryptocurrencies in my mind for the long term is, of course, Bitcoin. And we have been investing in Bitcoin personally here at Follow the Money since 2013. It has been quite a ride, and we have learned so much over the years owning this asset. And we have just released a brand new video called Bitcoin 101. For those of you who are looking to understand what Bitcoin is, how it works, why it is so attractive to investors, and what the future could hold for this unique asset, this is a must-have video. It's on special right now for a very discounted price, only $7, to give you access to a full hour of education from me, someone who has actually been invested in Bitcoin for more than 8 years. So you're going to learn a tremendous amount in this 1 hour video. I encourage you to check it out. It's now available in our online store. Simply go to followthemoney.com/shop, and there you will find this brand new Bitcoin 101 video, an hour-long, jam-packed with education that you need. Not only do we talk about what Bitcoin is and why it's so attractive to investors, we also talk about our own approach to cryptocurrency investing and how we approach Bitcoin in particular. So you'll really learn a lot. If you know someone who wants to learn more about Bitcoin, if that's you or someone else you know, check out followthemoney.com/shop and get instant access to our brand new Bitcoin 101 video. I know it'll be a great eye-opener for you if you're looking to invest in cryptocurrencies. So go to followthemoney.com/shop and get your Bitcoin 101 video today. Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, well, next up on today's podcast, we're going to be joined by financial advisor Mike Mitchell. You've probably heard about Mike through many of our various live events that we've done. He's also been a guest here on our podcast many times. On this week's very special Sound Retirement segment, Mike is going to share with us how retirees can create tax-free income in retirement. You know, when many people try to boost their yield in retirement, they tend to think of municipal bonds. But as we're going to learn in today's segment with Mike Mitchell, there are at least 4 or 5 other powerful strategies for creating tax-free income in retirement that offer even more flexibility than municipal bonds. Let's head over now to Mike Mitchell to learn how to create tax-free income in retirement.
Hello everybody, this is Mike Mitchell with Strategic Wealth Partners and Christian Financial Advisor Network coming to you with some very interesting questions. Let me ask you this. When it comes to yield, when is it possible for a 6% yield to actually be an 8% yield? When could an 8% yield actually be almost a 10% yield? Or when can a 4% yield be almost a 6% yield? Now you might be asking yourself, Mike, have you just lost your mind, or is this just funny math, or what? And the answer to that is no, of course, but what I'm talking about is your yields whenever there is no taxation attributable to the yield. You will find that the tax equivalent yield will be much higher than what you would imagine. For example, if you are in a 25% tax bracket, a 6% yield after tax is actually a tax equivalent yield of approximately 8%. An 8% yield in a 25% tax bracket is an approximate yield of 10%, and so forth. So how do you do this? How can I possibly position myself so that my retirement income comes to me in the form of a tax-free income? Well, probably the top of mind answer would be, well, I'll just set all my assets up into municipal bond portfolios, and I'll ladder those portfolios, and I will have essentially tax-free income. And that, to some extent, is a true statement. However, there are other more flexible, more liberal, more interesting, and what I would say are out-of-the-box strategies that can help you take assets and position them so that you could have those assets in retirement in a tax-free environment. I can think of about 4 or 5 or 6 different strategies that are available to most anybody if they understand them that would create a tax-free income stream for you in retirement. You don't have to get nearly as aggressive. You don't have to get nearly as much yield from a tax equivalent standpoint to create some very nice income figures in a tax-free environment. What I would like to do is to be able to share these ideas with you. So if you would be happy to give me a call at 833-370-0777, I'd love to share some of these concepts with you. So when it comes to a sound retirement, my advice would be look for ways to position your assets in a tax-free environment, and that you will find that retirement can be much more fun and much more lucrative for you if you can manage to do that.
Mike Mitchell is a part of our Christian Advisor Referral Service, and he's here to help you with your retirement needs. If you'd like to reach out to Mike directly, you can call him toll-free, 833-370-0777. That's toll-free, 833 area code 370-0777. All right, friends, welcome back to the program. Great to have you here. We're in our final moments of today's podcast. I hope you enjoyed that discussion on China's new digital currency. We have the link to the original Wall Street Journal report, along with a few other things in our show notes today. Be sure to find that on followthemoney.com. And we also, by the way, just did a big video for all of our gold and platinum members last week, or actually this week, I should say, entitled My NASDAQ 100 Strategy. And in this video, it's about an hour-long video, but I talk about how I actually trade and invest in the NASDAQ 100. And it's a pretty powerful video. We also just released a new video for our Gold and Platinum members entitled Stock Investing for the Long Term, where we share our long-term investing philosophies and strategies, all about, the stock market. So if that stuff is interesting to you, plus cryptocurrencies and education on that front, precious metals, and also trading and all of these different things, real estate, all of it's available for our members. You can go to followthemoney.com/join, choose a plan that's right for you, and become a member of our global community. We sure would enjoy having you here, and you would begin to learn so many new things about how to take advantage of the many opportunities that are around us today. There are so many opportunities awaiting each and every one of us. And with that said, that brings us to the end of our program. Thank you so much for tuning in this week. And let me leave you, as always, with this final word written by the great American novelist and social reformer Upton Sinclair, when he wrote, "It is difficult to get a man to understand something when his salary depends on his not understanding it." And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
The information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted